The fifth stage is environmental reporting. At the moment, environmental reporting isn't driven by the accountant. It's going to have to be, but at the moment it's driven by environmental health officers, environmental officers in general, the environmental director, maybe even the commitment of a chief executive. But we can see a considerable development in new environmental reporting. We hear constantly of environmental reviews, environmental audits, environmental impact assessments, life cycle analysis, life cycle assessment. As will be obvious, accountants training doesn't really help an enormous amount in these areas. Sure, we can get involved at the early stages, and it's certain we should understand them. We are, after all, trained to understand systems, and systems thinking is all this is about. But what we don't know how to do is measure toxicity, measure water pollution, measure air pollution, which are, at some stage or other, an essential part of these processes. What we can do, and certainly must do, is understand these things and recognize that they provide the agenda for the changes in our information systems. The sixth level, and the one that really matters, and the one that accountants have to find a way of doing, is to capture sustainability, to find some way of really making that firm link between your overall economic performance and your overall environmental performance. Sustainability is the link between those two, and we're going to have to find new ways of bringing the two together. Sustainability at its simplest means that future generations are left with the same choices that we inherited.
Is it easy to play a game by that now?
No. That's why I've done it.
And where's... Oh, you have to put money into play, do you?
Yeah, I put a pound in it.
What does this mean for a company?
Oh, right.
Well, that's all I had.
Well, at the moment, nobody really knows what sustainability truly means on a day-to-day basis. It's quite probable that we never can know. We can never know exactly what is a sustainable way of life. What we do know is that all Western society must be sustainable. And we also know that Western society is not sustainable. All we're arguing about is that gap between where we need to be and where we currently are. We need some measurements for that. Let's have a look at some of those examples of companies experimenting with new forms of accounting. Perhaps the most famous is BSO Origin, a company that came from nowhere simply because of their attempt, their laudable attempt, to unite the economic and the environmental within the same statement. In their case, they use a value-added statement. The problem with that sort of approach is that they do switch between different forms of valuation. Maybe this shouldn't bother accountants. After all, what do we do in our financial statements but switch between different forms of valuation? But it does mean it produces a number at the end which is very difficult to interpret. A much softer, but perhaps more potentially viable approach has been taken in Austria and Germany with something called the Ökobilanz. The Danish Steelworks has also undertaken such an approach, which tries to take the methodology of environmental review and of life cycle assessment and to plot the flows of materials throughout the organisation. So it works on an input, output, leakages and emissions basis, and tries to identify where everything comes from, where everything goes to give you a picture of the likely areas of environmental interaction in a company. But even these don't go quite far enough, and accountants may or may not feel the need to get involved. Where accountants can get involved is if we think back to what we really mean by environmental problems. If we think back to the idea that we have this man-made capital and this natural capital, and at the moment we accountants are measuring this man-made capital, think of the natural capital as consisting of two types of things itself: critical capital and renewable or substitutable natural capital. The trees around me are substitutable natural capital. The ozone layer above me is not. It's critical. We've only got one of it. It is life-threatening if it's removed. What we can say is that the organisation which has increased its man-made capital has done so at the expense of both renewable natural capital, some of which it's renewed, some of which it hasn't, and at the expense of critical capital, which is, as far as we're aware, quite unrenewable. I think accountants can go a stage further, because we can say to the company, what would it cost you to put the environment back into the state you found it at the beginning of the last accounting period? Okay, it accepts that the world's in a terrible mess already, but let's see if we stop it getting much worse. It's possible to cost out what a company would have to undertake to renew the capital, to replace the capital for the trees, for the minerals. And certain areas are not renewable. The critical capital has an infinite cost. The company cannot reimburse society for the costs it has incurred. I'm not saying that companies should be charged this amount. I'm simply saying we need it in their financial statements to show how much would be necessary if society were to become sustainable. Only in that way will we have the kind of information that will allow us to make our personal value decisions. Do we still buy this product? Do we still work for this company? Because to do so involves this sort of environmental impact. This we call sustainable cost, and our recent investigations, which I'm glad to say are developing with companies, would suggest that no company in the Western world has made a profit for at least 50 years, and perhaps a great deal longer. That means we've been paying dividends out of natural capital. And there aren't many things accountants can agree on. One of them is that we do not pay out of capital. And as far as we can work out, we have been doing so for a very long time. Surely that's the kind of language that an accountant can understand and the kind of reasoning an accountant can contribute to. The more one considers environmental issues, the more one is led reluctantly to the conclusion that we're doing too little, too late. We know we've got to be sustainable. We know we're not sustainable. The gap between the two is probably too large to be filled by small reductions in energy usage, small reductions in waste, and by tinkering at the edges with our investment systems. Business has come a very long way, but it still has a very long way to go. Accountants? Accounting must stop thinking of itself as purely technical. Accounting claims to be a profession. It claims to serve the public interest. It claims to have a theoretical base for what it does. Accounting is not just technical. It is social, it is political, and it is environmental. That is the theoretical base, and that is how we will serve society. Accounting has enormous influence. At the moment, some of that influence is preventing companies developing environmental policies. But accountants can influence companies' development of a stronger environmental profile. And probably our biggest influence will come in areas of reporting. We have the influence to develop standards of reporting that will increase the transparency and the accountability of corporations for their environmental impacts. Only then will society have the kind of information it needs to assess whether organisations are in fact sustainable, and if they're not, whether in fact that matters. Accountants have the talent for this. They have the skills for this. Do they have the will?
The book, Accounting for the Environment, by Rob Gray, is available from TV Choice.